Got 3 minutes for some financial literacy? Follow the finance baddie. Part 1. What are retained earnings? Being presented by Black Girl Magic Masters, LLC. You already know, we're trying to say this whole motherfunking universe one person at a time if we have to, because we're on a mission to restore our people in our community financially. So let's get into it. So, what's the definition of retained earnings? Well, retained earnings are the portion of a company's profits that are kept after the dividends are paid out to shareholders. It's the money left over after you done spend it on everything, right? But this money can be reinvested in the business or used to pay off your debts, right? Basically, once you grow your business past an LLC, you become an S Corp and you'll have shares in your company. Moving right along. Now, what are the advantages of retained earnings? Well, it should be obvious, but retained earnings are profits that are kept in the business after you paid off all your debts or after dividends are paid. Retained earnings can then be used for future investments or to pay off debt. Retained earnings can increase the value of a company's stock over time. Now, how retained earnings are used? Well, retained earnings are profits reinvested into the company after dividends are paid out. All your debts and stuff have been paid out. Like I said, it can be used to grow your business. It's for debt repayment or just some reserves. You know what I'm saying? So here's like the financial operating cycle. Some of you guys can zoom this in on your phones or your computers, but I would behoove you to do so. But the way that it works, remember I told you about the two most important financial statements? That is the income statement and the balance sheet. So the way that this financial operating cycle works is basically with your income statement, you have your sales and your net profit. And then with your balance sheets, you have your assets, which is equal to all your liabilities plus your actual net worth. Now, as far as your, income statement, your sales and net profit, here's the uses. Okay? You use it to pay off new assets, to pay off debt, to pay out to your creditors, or the owners of the debt that you owe, right? Moving right along, because again, these are the two most important documents in your business, small business owner. Listen, you have the income statement and then you have the balance sheet. Okay, wait a minute. We're going to have to continue this on in the next video. See you in the next video.